If you are focusing only on headline political debates to understand the world's economic trajectory, you might be missing the bigger picture. The real shifts in the financial system are hidden within the corporate strategies of those managing trillion-dollar capital flows. Larry Fink and BlackRock, with over $10 trillion in assets under management, stand at the very forefront of these capital allocators. Fink's annual letters to shareholders are far more than just corporate reports. They serve as a macro projection of where global capital will flow across geographies and sectors over the next decade. However, his latest letter points to an unprecedented structural fracture. We are on the brink of an era where everything from global capitalism's production models to retirement systems is being rebuilt. In this video, we will objectively analyze Larry Fink's statements and the economic logic behind them. You can access the original text of the letter and the data we examined via the links directly in the description below. In his letter, Larry Fink notes that an economic model the global system has taken for granted for decades is coming to an end. In his own words, the old model of global capitalism is fracturing. Countries are spending enormous sums to become self-reliant in energy, in defense, in technology. For years, capital viewed the world as a single global marketplace, flowing effortlessly to geographies with the cheapest labor and raw materials. Today, however, this supply chain security is breaking down. The shift toward bringing production back within domestic borders or moving it to trusted allies, known as onshoring or friendshoring, is driving the global economy into a structurally more expensive era. But why is this transformation an absolute necessity, backed by independent sources? International Monetary Fund reports show that global public debt stock has reached historic peaks. Fink emphasizes this exact point. Debt-strapped governments cannot finance this massive transition alone. To support artificial intelligence factories, data centers, and the energy networks required to power them, the global economy effectively needs to be rewired over the next decade. The estimated budget is staggering, nearly $10 trillion. The core logic to understand here is that smart money is no longer just chasing abstract software. It is pivoting toward nuclear power plants, energy grids, and concrete physical infrastructure. One of the most heavily debated and thought-provoking sections of the letter addresses the deep contradiction between increased human longevity and the design of current financial systems. Fink openly acknowledges that modern social security and retirement models were never built for a world where humans routinely live to 80, 90, or even 100 years old. While World Health Organization data confirms that global life expectancy is rising rapidly, it also reveals that the mathematical model of governments paying out pensions for decades solely through tax revenues is unsustainable. Fink's most striking historical analysis in the letter highlights a structural shift in wealth distribution. Since 1989, a dollar in the U.S. stock market has grown more than 15 times the value of a dollar tied to median wages. Reading this statistic correctly is crucial. Fink is comparing the total return of broad market indices like the S&P 500 to average worker wages, which have virtually stagnated in real terms when adjusted for inflation. This data does not reveal a hidden conspiracy. It illustrates a fundamental economic reality. The era of preserving value simply by selling your time and hoarding cash is over. The value generated by markets disproportionately flows to asset owners. Consequently, the system is forcing individuals to evolve from traditional savers into long-term investors who own a share in economic growth. Faced with this massive transition, instead of asking short-term, speculative questions like, which stock should I buy? You must build a mindset focused on a deeper question. With what logic is global capital moving? True financial literacy means looking past popular trends and seeing how capital is shifting toward the scarce resources that keep those trends alive, namely energy, computing capacity, and physical facilities. Second, you must understand systemic risk and diversification. In this new era where globalization is receding and protectionist borders are rising, the risks of tying your entire net worth to a single country, currency, or sector are significantly higher than in the past. Analyzing how capital is geographically distributed is essential. Finally, you must factor inflation and time into your equation. During periods of high inflation, the purchasing power of cash can come under severe pressure. Therefore, when mapping out a financial future, understanding the logic of integrating your capital into long-term, wealth-producing assets, rather than keeping it purely as nominal cash, is the absolute key to understanding the future economic order. The macro moves of governments, massive capital groups, and international institutions are actively shaping tomorrow's world. The question is, will you watch this wave of change from a distance, or will you rationally analyze where resources and capital are heading? To cut through the daily financial noise and follow our critical, data-driven analyses of the global economy, make sure to like this video and subscribe to the channel. Thank you for watching, and we will see you in our next analysis.